When do you know it's time you should fire your financial advisor? And maybe that sounds harsh, but the reality is not every advisor-client relationship is meant to last forever. And frankly, some might be staying in situations that are actually hurting their financial future. Uh, the good news is if you have a financial advisor, I think first and foremost that puts you ahead of a majority of people. There are a lot of people that don't even work with a financial advisor. And the second thing that I would say is I know there are a lot of great quality financial advisors that are out there, but I've also been talking with folks a lot that have been coming in their office. They've been kind of looking for second opinions because they're not happy with their current advisor, and usually it really comes down to two big issues. One is they're not seeing the results they expected, or the service isn't quite, what they were looking and what they thought they were paying for. A perfect example is I had a client that had recently come in, and we did the independent portfolio analysis, and we kind of looked at the money she had in her taxable account. We looked at the money she had in her Roth IRA account, and we looked at the money she had in her traditional IRA. And in all three accounts, she had the exact same investment strategy. And what's unique about that is the same approach in each account really didn't make a whole lot of sense. One, it was creating excess taxes that she was paying on the dividends inside of her taxable account. Two, she was missing out on, the growth potential of the tax-free account, which would be the Roth IRA. And three, she could incorporate what I would refer to as circuit breaker technology, being able to have a more tactical or asset managed approach inside of the IRA. So that is an area where I think, somebody is not getting the highest level. Maybe, they've got a good retirement, but they're looking to go from good to great. Here's the thing for a lot of people, switching advisors, it can feel overwhelming, maybe a little bit scary. And I get it. You've shared your most personal financial details with this person. You've trusted them with your life savings, your retirement dreams, maybe even your kids' colleges. So how do you know when it's time to make a change? And how do you figure out who to pick? I've identified a couple of red flags, and then I'm going to give you a couple of ideas on what to look for when choosing a financial advisor. So I think the red flag number one is what I would refer to as a communication blackout. What I mean by that is you've purchased some type of financial product, and I have to ask you, when's the last time you've heard from your advisor? I don't mean just a generic market update email that they went out to their entire list. I mean, when is the last time you've got personalized communication about your portfolio, about your goals, and about your numbers? If your advisor only surfaces when there's something that they want to sell you or there's something new, or if it feels like you're bothering them when you give them a call with questions, that's a problem, and that's a red flag, especially in volatile markets. You really want to have great communication both coming from and going to the advisor that you're working with. Your advisor really should be proactive during those uncertain period of times. Red flag number two is you need a specialist, but you've got a generalist. And there was a conference that I was at. It was up in Detroit. It's always stuck out to me because of the fact that the gentleman had a business card and it folded open and it rolled down because he had every single thing that he did inside of there. And ultimately, he did everything from college funding to debt reduction. I think he could help you increase your FICO score, to investing in stocks, bonds, and mutual funds, and managed accounts, and life insurance, and disability, and on and on and on. And really, what he had is he was just a generalist in all of those categories. And when you start out, maybe that worked out just fine. Maybe you just needed basic investment advice, and that's what you needed. But as life changes, as an example, as you transition from your working years into retirement time, Maybe you've started a business and your business has grown bigger than the relationship that you have today. Maybe you're dealing with things like stock options from your work or what to do with the stock in your 401k and needing to understand things like net unrealized appreciation. Maybe you've inherited property. Maybe you're going through a divorce or you're just getting ready to retire. Those are the type of things that I think you really want to kind of have a specialist in place. You want to be careful about an advisor who needs to go onto Google and Google everything while you're sitting there and says, maybe that's not just my area. It's time to find somebody who specializes in where you're at in the phase of your life. And, don't get me wrong, there's no advisor that knows everything. A great advisor, in my opinion, is going to be an advisor who surrounds himself with a team to be able to collaborate and bring in into these different situations. Red flag number 3 is your financial plan is written in ancient Egyptian. And maybe that's an exaggeration, right? But if you walk away from meetings with your advisor and you feel even more confused and walking in, there's really something wrong. Your financial plan shouldn't require a PhD to understand it. Really, you should be able to explain your basic investment strategy to a friend over coffee. You should understand why your money is invested the way that it is, what the risks are that you're taking, and how the strategy connects to your unique goals. If your advisor just talks in jargon terms, shows you charts that might as well be in hieroglyphics, you can't get straight answers to your questions, and they're maybe not doing the job that they needed to. Really, that is another red flag. So red flag number 4 is the fee mystery. Pop quiz. How much are you paying for your investments in total? Not just the management fee. I mean, all of the fees, the expense ratio of your mutual funds, your transaction costs, your administrative fees. What is the all-in total expense? If you can't answer that question, or if your advisor gets squirmish when you ask about fees, that's another massive red flag. And here's what really gets me fired up is when advisors aren't transparent about how they're getting paid. They're getting commissions from the products that they sell you, or they charge in management fees. Do they get bonuses to steer you in from one product to the other? Are there conflicts of interest that you should be aware of? You have every right to understand the total cost of working with your advisor. And if they can't or won't give you a clear written breakdown, then find somebody who will. Red flag number 5 is the trust factor has left the building. And that may be a hard one to quantify there, but it might be the most important. Do you trust your advisor? Do you feel confident in their recommendations? Do you sleep well at night, knowing how they're managing your money? Or do you find yourself second guessing some of the choices that they gave you? Are you still losing sleep worrying about do you have enough? Is your financial future going to be okay? Do you have a plan in place to make you confident with the decisions that are being made on how your portfolio is put together? Feeling like you really understand your goals and your situation. Trust is really everything in a relationship. And if it's gone, pretty much everything else falls apart. Maybe they've made promises that they didn't keep. Maybe they pushed you into investments that didn't really necessarily line up with what your risk tolerance is or what your goals are. Maybe they just didn't seem to really care about the success as much as what you care about. Whatever the reason, if you've lost confidence in your advisor, it's time to have an honest conversation about whether that relationship can ever be repaired or whether it's time to kind of move on. Red flag number 6 is they're missing an action during volatile market times. And that's a big one here, folks. When the market gets choppy, like it has been lately, that's the time you need your advisor most. That's the time when experience and guidance should really shine. If your advisor disappears during market downturns or your strategy during volatile times is to just tell you to hang in there and ride it out, you're not maybe getting the total value that you're paying for. A good advisor doesn't just manage your money, They manage your emotions, and a good advisor is going to help you get through those difficult times and turn challenges into opportunity, turn fear and panic into finding out where there are strategies to take advantage of those opportunities. They communicate during those clear, volatile times with clear messages. So, looking to switch advisors isn't an easy decision. It's not one to take lightly, but staying with the wrong advisor can cost you more in the long run than the temporary inconvenience of making a change. If you're recognizing your situation has any one of these red flags, I think that it's time to really begin to look for, choosing a new advisor. When you're looking for choosing a new advisor, you want to look for asking references. You want to have a couple of those references would be client references. A couple of those references should be professional references. It's important that you call those references. When you call those references, I think the questions that you want to ask is, tell me a little bit about your experience in working with your advisor. Tell me a little bit about how the communication is. Tell me a little bit about, when you request service needs, how those type of things are handled. Talk to the professionals that they work with. If you bring in an attorney, if you bring in a CPA, how are they working together to provide you the best possible outcomes? Ask about the fees. Ask about how they charge fees for service. Do they charge you a flat fee for consulting advice? Are they paid based upon the assets under management? Are they paid from the financial products that they sell you? Knowing what those fees and expenses are, and again, having a clear understanding of what those fees and expenses are, is a good way for you to make a good decision if that's a great relationship as well. Ask about the ways that they are going to provide financial planning advice for you. What process are they going to go through to develop some type of plan? Are they using planning software? And if so, what is that planning software telling you about what the outcomes are? And how are they going to try to use that software, use technology to increase the odds of your success? If you're working and you're looking at all those, then you also want to talk to them about what their financial background is. I myself have been in the business a little over 30 years, and I can say that experience matters in times that it's dealing with your life savings. I know as a younger advisor, I didn't have as much experience. I had a college degree, but things you learn over time as well. So again, ask a little bit about their financial background. What professionals do they work with that they turn to in different times? How do they keep up with the ever-changing environment that's in the financial services industry? Ask about how many clients they have, how many clients that they take on. Those are the type of things I think that you really want to kind of walk through when you're looking, is it time to switch advisors? And if it's time, if you want a second opinion, we'd love to sit down and have a conversation with you, have a visit, and just see if maybe we could be the right fit for being part of our family here at America's Retirement Headquarters.